Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at trading with symmetrical ABCD patterns. Now, an ABCD pattern has been around for a very long time, centuries. You can pretty much find it on any trading chart anywhere around the world, and that's because it's reliable. It works, and really, you can use it in a lot of different ways. You can use it as an area to tell you that, hey, maybe I shouldn't be taking a short into this level, or maybe I should be taking profits here, or to be looking for a reversal. Now, the main idea behind a symmetrical ABCD pattern is that the first point, let's just use this point up here, 5, 6, 7, and 8. The distance from 5 to 6, if I drew a line there, and I took this and copy-pasted this line down to the next leg, 7 and 8, they should be really, really close in size. Now what that means is that if this first leg was, say, 20 ticks, this next one should also be about 20 ticks. And that's typically the idea behind a symmetrical AB equals CD. And what that's referring to, again, is you've got A to B equals C to D down here, and that's kind of the idea behind it. So again, you can use it in a lot of different ways, but one of the best ways you can use it for is looking for an area for a reversal. Now, the first key part of this, and this is a big important part of using this as a reversal, is you need to find an area of support or resistance on your chart, and this has to be on your anchor chart. It's got to be a big area of support or resistance. Now, once we found that, what we can do, as an example I can show you right here, looking at our 60-minute chart, this was on the day that I'm looking at here is on the 15th, where we came down into this low right around 12 o'clock or so. Looking at our anchor chart, we can see if we adjust this trend line down here, and I adjusted it just using these swings that we would have had at that period in time, were these two right here. We're looking for a test of that trend line, which we had right here. Now, coincidentally, we know that that's at around 12 to 1 o'clock, which is exactly the same area that we're looking at on our entry chart. This low came in at 191, and we'll compare it to this one where the low came in at 191. So this area right here was where we tested that trend line. Now what we want to do is we want to find a symmetrical ABCD going into that level. And as an example, we have a perfect one right here where measuring from this point down to 6, and I'll make this arrow a little bit brighter here so we can see it, should equal, if I copy paste this line, should equal relatively close to this level right here. From 5 to 6 should equal 7 to 8. And you can see we came really, really close. We got it and then went a little bit further. We went 3-4 ticks past it and then began to reverse out of that level. So that's the idea. You want to find it in a very high important area of support or resistance. So now we've identified where our entry point is going to be. Our entry point is going to be somewhere in this area down here. Now we need an entry trigger to get into it, and you could use, a wave pattern, a reversal bar, whatever you wanted to look for in that location, you could be using. But taking a look at the trade itself, now we found where we want to be getting in long. Well, how do we get in long? Where do we enter? Well, again, you want to find a type of entry pattern. As an example, a really easy one, you've got a 2-step pattern long right there. We came down into that level, got a little bounce for a swing high, came down again, and now we're looking for a break of that level. So you could enter with a 2-step. You could also enter with a wave pattern or even a bigger wave pattern. You've got a lot of different options in terms of your entry pattern. But once you enter it, where do your stops go? Where do your targets go? How do you manage the trade? Well, first off, we know that price shouldn't fall below this level. That's the measured move. So our stop can go 2 ticks right below that low down here. So easy enough there for the stop. Now where does our targets go? Well, the targets are going to actually be based on a couple different things. First off, because this is a measured move, we've got these 2 swing highs here that we can use to our advantage. And all we're going to do is we're just going to connect them with a line and use that as a trend line. And that is going to be your first target. So that's target 1 is at the trend line. And you can see the reason why we use this, it bounced off of that level first before it started catching a little bit of a reversal. So this is going to be that first target at the trend line. The next target is going to be at that first swing high right there. And the second target, if you've got more contracts, is going to go at the next swing high up there. So those are going to be your 3 targets. You've got a lot of different options with these. And looking at this price action, we would have bought down here either with a 2-step, even a reversal bar, a lot of different options there. First target taken off at the trend line, second target hit right here at 101.38 at the swing high, next target immediately taken out right after at 101.54. So it's a very, very strong area of support and resistance just by itself. But you couple that with another huge area of support and resistance, and you've got yourself one heck of a trade. So that's going to be taking a look at trading with symmetrical ABCD patterns. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one. Bye.